Hello friends, welcome to your channel FINOMENT. Today our theme for the mutual fund will be the banking and financial sector. Since this sector has underperformed from the last 1.5 year to 2 years, so we expect that this sector should outperform in the near future. So we have selected this theme for the our four best mutual funds. So let's move on to understand the essential of banking and financial system in our economy. So as you all know that banking sector always play a crucial role in our economy, as our all the day-to-day transactions of borrowing, deposit, lending, etc. all through done banking channels only. Every business is dependent on the banking and financial sector. Even our stock market is also dependent on the financial system, or daily pay in payouts, even purchase and sale of transactions done through the funds. So banking contributes the very important growth to our economy. Without the banking, our economy is nothing. So now let's understand the introduction to the sectoral banking funds. See, in these funds, all our funds will be allocated toward the shares of the all Indian banking systems, that is banking sector. So these funds will beat the benchmark. That means this fund will give outstanding return if banking sector performs the well, and if does not perform well, then this fund never gives the good returns. Here the investor will get the exposure to ready-made portfolio of all the banking shares and securities. Now, who should invest in this fund, and points you should consider as an investor before investing in this fund? So as I always say, these are the sectoral or thematic fund, and these are the high risk high return fund, because this fund is also called as a cyclical fund, because this fund beat the benchmark, will give a outstanding return if banking sector performing the well, and if they don't perform well, then they will not even beat the benchmark, even they can give a negative return. So during last 1.5 year to 2 year, this sector has not given any return, so this fund has not performed very well. So these funds are actually suitable for the aggressive investor, that is those who willing to take the high risk. That's why I say that conservative investors should stay away from this mutual fund. Don't invest in this mutual fund if you are a conservative investor. If you are a aggressive investor, then only you should invest. And the second part for this fund to invest is for minimum horizon. Investment period should be 5 years. See what happened, those who have invested in the initial phase of the 2 years may not have get the return, because in 2 years the banking sector hasn't performed. So in near future it may perform. So investment horizon more the better, that is 5 to 10 year will be better. In next coming years the banking sector will perform better, so these funds will also automatically perform better. See, these are the focused fund, you can say, because this focuses only banking and financial stocks only. So here you will get the exposure to the ready-made portfolio of top performing banking shares. So as your horizon is more than 5 years, your portfolio risk will automatically gets reduced. Now you will get the exposure to the banking and financial holdings in this mutual fund, which we are going to discuss. These are the top holdings of the mutual fund. There are more shares, but we have taken the top holdings. So first will be private sector bank, that is HDFC Bank, ICICI Bank, Kotak Bank, Axis Bank. You will get the exposure of these banks, Citi Bank, HDFC Limited. Then government banks also there, that is State Bank of India, Bank of Baroda. Then we will get the exposure to the finance company, NBFC companies like LIC Housing Finance, Muthoot Finance, PNB Housing Finance. You will get the exposure to the insurance company as well, because these also cover under the financial system, that is SBI Life Insurance, ICICI Lombard Insurance, HDFC Life Insurance. Even you get the mutual fund companies exposure in your portfolio, that is asset management company, HDFC Asset Management Company, ICICI Security Broker Company, then Aditya Birla AMC, UTI AMC. So you will get the overall banking and financial exposure in your portfolio if you are looking to invest in this sectoral fund. So let's start with the first fund. Our first fund is SBI Banking and Financial Service Fund category. As we already discussed, these are sectoral and thematic fund. NAV is superb, that is only 25 rupees. Fund size is very attractive, that is 2879 crore. Expense ratio is very superb, that is only 0.85%. Now we will discuss the annualized return. As I clear, these are not absolute return, these are annualized return. And category average, that is sector, from this sector what is a category average return, and this fund return means SBI Banking's return. So this fund has given 17% return, whereas category average is 56. As we have already discussed, since last 1.5 year to 2 years this sector hasn't performed, that's why this fund has not performed as expected, so it has not beaten the category average return as well. But in 3 years this has given a amazing return of 14%, and 9% is a category average return, whereas this fund has given a almost 19% return in 5 years duration, whereas category average is 12%. So it has outperformed, because in last 5 years this banking has performed very nicely. So these are the annual return. If you convert them into absolute return, so 5 years return is 19%. If you convert them, you will get the more than 100% return in 5 years. So let's move on to the next fund, that is Tata Banking and Financial Service Fund. The category is same, sectoral. NAV is 27 rupees. Fund size is very nice, that is 829 crore. Expense ratio is very lower, 0.87%. Annualized return for this fund is 17%, whereas categories again under category will be categories average return will be the same for all this fund. So 1 year it has given a 17%, in 3 year it has outperformed 15%, and 5 year also marvelous return of 18% of annualized return, that is CAGR return. Then third fund is Aditya Birla Sun Life Banking and Financial Fund. NAV is 40 rupees. Fund size is, that is 2101 crore. Expense ratio is on a higher side, that is 1.20%. 1 year return is 21%, 3 year return is 12%, and 5 year return is marvelous of 16%. And last fund on our screen is ICICI Prudential Banking and Financial Service Fund. NAV is very fantastic, 88 rupees. Fund size is also very attractive, almost 4900 crore, and expense ratio is on a higher side, this is 1.20%. 1 year return is 27%, 3 year return is 11%, and 5 year return is 16%. If you feel that video is useful to you, then please do like our video, and please subscribe to our channel FINOMENT if you have still not subscribed it, and press the bell button so that you will get the notifications for the next videos. And also please comment it in the comment box on which topic you want to watch the next videos.